So today I'd like to talk a little bit about the ongoing supply and demand issues we're seeing right now in real estate. And it's one of the reasons I believe that we're not going to see a huge market crash. So let's get into it. I'm Tommy. I'm with Agoura Real Estate. Welcome back to another market update. So one of the reasons the cost to buy a home is so high right now is because there just simply aren't enough homes for everybody. Millennials have surpassed baby boomers as the largest living generation, and they're entering peak home buying age faster than you can say.
Okay, boomer.
So thanks to modern medicine, baby boomers are living a lot longer than previous generations, which is fantastic. But that also means they're living in their homes longer, which isn't great for millennials who need homes. Now you might be thinking, did they just stop building homes at some point? Well, yeah, pretty much. As you can see, since the Great Depression, not many homes were built. And now we have to pay the price for it. At this point, you might be thinking, well, why don't we just build more homes for people? And you'd be smart for thinking that. That would fix the problem. But therein lies another problem that I want to talk about today. Builder confidence. So in a market where rates are rising, and they are, national average on a 30-year fixed rate mortgage is currently 5.35%, builder confidence goes down. And here's why. When rates are higher, it means buyers are getting priced out of the market. When buyers get priced out of the market, it depresses interest in new homes. And on top of that, building costs and materials are 19% higher than they were a year ago. And that's thanks to the high inflation we have and also the ongoing supply chain issues that we're dealing with. So overall, it's just risky for them to invest and move forward in new projects. Long story short, we have a major housing shortage because we're desperately short on supply and demand is really high. And it's hard to have a crash, and I'm talking like 2007 crash, when there's a shortage of something. And while I do think a crash is out of the picture, I do believe that interest rates are going to cool the market. Now, be sure to check out last week's video for some clarification on that. Alright, so let's move on to inventory. We have 183 active listings on the market this week. That's exactly one house more than last week.
Business is booming.
And if we take a look at some of the sold statistics, you can see that on average we're still selling above that list price. But as I mentioned last week, the market shift is showing itself in other ways, such as price changes. And that's all I have for you today. Thanks so much for watching. Please give this video a like, subscribe to the channel, and I'll see you next time for another market update. Cheers.